Okay, everyone, welcome to today's analysis on Euro USD. Let's see what's up, let's see what the market's up to, and let's see what our plans are moving forward. But first things first, big shout out to those of you following and supporting the channel. We're trying to grow it to 150 in the next 2 weeks. All right, so let's see how we get on. But big shout out to those of you who have followed. Shout out to Capable Jaguar, Marjar, William. We're just gonna go with William because this Mexness kind of throws me off. And then ZJ807532, shout out to K Kobar. Please do not blame me if I butcher your name. All right, my pronunciation is not the best. Shout out to Shay Trade 123. Big up to Shay. Shay likes / boosts all my content, so much love, appreciation to Shay. So shout out to everyone following, and as you continue to grow this space day by day. All right, so what can you expect here? So here you can expect daily updates of the price action of Bitcoin especially, and Euro USD. We play around with it from time to time, and we look at the setups and we trade it as and when the opportunities present. Right, so next, just to let you guys know, I am giving this away for free. It's my very own trade journal, and it's just a link. I think it's probably the best way to track your trade, track your thinking framework, track your progress, put your P&Ls, your losses, and just follow what you're doing as a trader iteratively. All right, so always journal and monitor your thoughts and just track your progress and see it visually. So if you do want this, hit that follow button, send me a message on Discord, and I will send you the link. No problem. All right, so let's get into the action. I think for Euro USD today, let's look at the global perspective, and then we're gonna zoom in. We're gonna zoom in and see what's up. Yeah. All right. So let's use our big eyes. All right, it's one of my favorite emojis, honestly. Let's use our big eyes and look at the price action for Euro USD since 2002. So we're going way back. All right, so what's happened? So we've had an uptrend. We've had higher highs and higher lows. All right, which was great. And then after our uptrend, we had a high, and then, we had this ugly bit of price action. Ugly. Why is it ugly? Because it's all internal structure, No real crazy, real market structure or swing highs or swing lows. But we did have 3 taps on the low, 1, 2, 3, all right, which didn't really work as well as we would have thought, because if this is a 3 tap on a low, we would have thought this is a reaccumulation. So uptrend, reaccumulation for further uptrend. I'm sure those of you trading this at the time were looking for that. And that third tap will show us, all right, cool, this is a Trinity Model 2, tap 1, tap 2, tap 3 to take us up to this high, this range high. But did it take us up to the range high? No, it did not. It dropped down instead. Now that's Euro USD for you. Euro USD, it loves to play games with you. It loves to play games with your bank account. It loves to play games with your trading account, all right? You've got standard market structure, technical laws, and Euro USD looks at it in the face and says, you know what? I know you think that's what I'm going to do, but that's exactly what I'm not going to do. It loves that. But what else does Euro USD love? Euro USD loves to create these divergent and convergent price actions. So here we've got kind of our divergent price action. Here we've got juicy convergent price action. And here we've got, again, another divergent price action. Again, don't do it. Just follow standard price action. All right. But anyways, you've got to trade what you're presented with and roll with the punches. But anyways, where were we? So it broke down from this range. We had this internal structure. It broke bearish, and then it had a new range which it accumulated. All right. So we had that accumulation over there, and then it broke bullish. Okay. What do we expect after bullish break in structure? We expect a retracement, a return to that zone, a pullback to our zone, this being our zone. We expect a pullback. It came deep into that zone. That was a sign that, hey, it shouldn't really be coming this deep. All right, if it's going to produce another bullish leg, it shouldn't be coming that deep. And lo and behold, what did it do? Well, it broke bearish immediately. All right, again, creating that divergent structure. Right, so that's where we are at the moment. So at the moment, on the monthly, we are on a downtrend. Why? Because we've had that low. What's the expectation order flow? The expectation order flow is a lower high for some more downward action. All right. But is it going to create that, divergent market structure again? Is it going to come all the way up here, making a bigger kind of like, what's that instrument? I guess you can think of it like a cone. All right. Look at that cone. Beautiful, beautiful cone. All right. So is that what it's doing? So we've got a cone here as well. All right. Nice little cones. It likes cones, doesn't it? See, we've got a cone here as well. All right, EURUSD, cone to cone to cone to cone, the cone within the cone. All right, let's see if we can come up with a bigger cone. No, we're stretching it, we're pushing it. Anyway, so let's carry on. So what are we expecting? We're expecting a lower high for further downward action. So what we're going to do now, we're going to have a look at this price action in here and see what's going on. So within that price action over there, if we look at perhaps, the daily, or we look at the weekly, what we're going to see is that this is that leg, this is that pullback leg, the pullback back into the zone. And what do we see again? We've got our divergent price action, all right? Well, we do have this nice range which we set, our big range over here. Now that's coming to more recent price action. Now that range created another range within it, all right? Which also created another range within it, all right? And that's where we are so far. So if we go deeper and we look at the 1 hour structure to see what happened, well, this is like the inside the internal range, all right? That's where we are at the moment. But what happened here? Well, we have a range that we break down from that range, taking us to this, let's call this like a secondary range low, right? We quickly break from that range low. And my goodness, was this a juicy trade? This was a trade I was actually given well in advance. We gave this trade, pretty much when we were around here, so around the 8th of April, okay? And it was a very, very juicy sweep, nice, beautiful sweep of that prior high, and it flushed down. Look at that flush, look at that aggressive bear trend bar. Flush down, try to accumulate, nope, not happening, flush down again, all right? And that's exactly what we were seeing. So now, we've broken down from this range, and really and truly, what's going on? Well, basically, we're continuing this bearish leg. We've got a bear, we've got a retracement, we've got another bear, we've got a breaking structure over there, we had a prior breaking structure over there. All right, so what do we expect, especially because we've broken from this range? We expect a pullback to the zone, a pullback, a retracement back into our zone, perhaps, before we carry on. We also notice we've got this bear trend line. This trend line that's been respected once, been respected twice, been respected 3 times. Will it get respected a 4th time before we go down? All right. But what's going to take us up there if we're ready to go up there? Well, we need to at least get a rebound, a bounce off some sort of zone. Where are we going to bounce from? We're going to bounce from our demand zones. All right. We're going to bounce from our demand zones. Now, where are these demand zones? Demand zone number 1 is coming at where we are right now. Demand zone number 2 below, demand zone number 3 below. That's where we're looking out to react. Now, I did enter a trade. I entered a trade. I haven't been in a trade in a while, actually. Especially even with Bitcoin, I haven't been in a proper trade in a while. A juicy, nice, nice, good trade. I think last trade I entered was late last, maybe about Wednesday or Thursday last week. I've entered 1 or 2 scalps, but nothing crazy, But what are we doing at the moment? So we've had this, drop down into this 1 hour zone. This zone is also confluent with our golden ratio, all right, which we're not going to look at right now, but it's a 1 hour zone regardless, and it's a demand zone. What do we expect at a demand zone? Well, demand, we all know this. Those of you who have been here for a while as well, you know that demand creates the juice to go up, and supply creates the juice to go down. All right. Now, what do I mean by creates the juice? If we go to the whiteboard, let's just go to a whiteboard quickly. Let's assume we've got price action, uptrend, higher highs and high lows, right? Higher highs, higher lows, high highs, high lows, high highs, high lows, high highs. Now, in each and every one of these zones, you have demand being left over. Usually, you're going to have some sort of demand over here that gets mitigated. You see how it breaks out? Comes back to get mitigated, all right? So we have demand getting respected. Now, these are what we call single bar demands, all right? They're single bar demands, all right? There are different types of demands, but these are single bar demands. Again, chances are we have some sort of demand there that gets mitigated, comes back to get mitigated. Also, we've got some sort of demand here that's come back to get mitigated. So what does demand do? Demand causes price to go up. Now, what is the job of demand? What was the job of this guy over here? What was the job of this guy over here? What was the job of this guy over here? Well, their job's simple. Their job is to break this structure. Break him. To break that structure. And the moment they've broken structure, that's confirmed it, that's great. We have our demand. It's active, ready for action / reaction. All right, so that's what demand does. And the opposite is true for supply. So if we want to talk about supply, we just invert it. It's the exact same thing. Supply, reaction. Supply mitigates. Supply mitigates. All right? All right? And that's exactly how price action forms. It's based on demand and supply. Simple economics. All right, looking at my battery, it seems as though it's time to charge my laptop. But I think we've got 19%. I think we can make it. All right, but anyways, that's what demand does. For those of you wondering, if you want to get a clear idea about how to play demand, hit me up on Discord and let's have a chat. All right, and my Discord link is in the bio. But anyway, so we've got our demand over here. So why did I enter this trade? Why did I do it? Well, we had our range, okay, and we had our breakdown from this range. Okay, so those of you thinking, where's the range? This is the range. This is the breakdown for the range. All right, now if you follow this channel for a while, you know we love PO3, power of 3. What is a power of 3? Well, the power of 3 is, a market structure phenomena. And what is it? It's basically when you have a range, which we call accumulation. We have a manipulation, and shortly after the manipulation, we have our expansion. So usually price action will do this in your range, okay? And then it will break down from the range, look like, bearish, it's going down. And then guess what? Probably sweeps at that prior low and then breaks up from that, all right? So this is just simply a manipulation of us, the retail traders, all right? So we get manipulated all the time. And that's why I looked to enter along here, because I was thinking, right, perhaps this is what's taking place, okay? And we're at our zone. I wouldn't enter. Usually I tell my students, do not enter a trade unless you have 2 reasons, at least 2 good reasons to enter that trade. The more reasons you have, the more confluence you have, the better, all right? So what were my 2 reasons here? Okay, so reason number 1. Well, reason number 1 was the fact we're at demand. Reason number 2 is I can see this PO3 play paying up, all right? Now, reason number 3 we're going to talk about now. Now, reason number 3 was I noticed that as we came into that zone, we had a break in structure. All right, where is that break in structure? Well, let's take a look. If we use the bar replay tool on green, what we've got here is, let's say, our primary structure. Our primary structure is down, it's bearish, so we're expecting lower lows and lower highs. But the moment we flip, we're going from printing lower lows and lower highs to high lows and high highs. That means we have a transition in market structure. So that's what we're going to see here. On the 1 hour, we get, our transition in market structure. We print our low, so we have a lower high, we have a lower low. Shortly after that lower low, okay, we have a lower high. We sweep that prior low low, and then we break structure. So we're going to have a look at that. We're going to see. So that happened, all right? It happened quite quickly. But really and truly, the change in market structure happens right around, it happens right around here, all right? So let me just draw that out for you. So we have our break-in structure right around here, okay? That's where we have the break. Now, did I enter on a 1 hour? Did I just see that and say, oh, do you know what? Yeah, sod it. I'm getting into that trade. No, that's not what we did. What we did is we said, okay, we've got these zones, we've got these areas, we're going to refine them. We're going to drop down to, the secondary structure. Perhaps we're going to look at the 15-minute. And we're going to see what's happening on that leg, that expansion leg as we come down. We can see we've got bearish action of lower lows and lower highs. All right, low, 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 high, low, 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 high, low, 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 high, low, 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 high. All right, then we have a lower low, and then we also break structure. But you do have to be cautious here. Why? Because these break-in structures, let's check how many percent we've got. 18, we're good. These break-in structures, they're not looking very convincing. Why is that? Well, because look, as we formed that high here, we came down here, we kind of started to wick. So wick over there, wick over there. That's not good. That's not what we want to see. What we want to see is a nice, big, juicy, aggressive trend bar, bull trend bar, that break structure. That's what we want to see. But we didn't get that. All right. So would this have been a breaking structure? No, it would not. Would this have been a breaking structure? No, it would not. So where would a breaking structure take place? Well, the breaking structure actually would have taken place, I would say right around here. So this is where I played my breaking structure, right around there. Okay. So as a result, we get that. Look at that bar. Take that for a bull trend bar. All right, that is a bar and a half. That is a nice bar. All right. Just appreciate that for a second. That is a nice bar. All right. So we get that bullish break, okay, on a 15-minute. Well, that makes sense, right? Because obviously we're getting a 1 hour break. We need to see a 15-minute break that has facilitated that. All right, so here we have it. Now we have a 1 hour bullish and a 15-minute bullish. So what am I looking for at this point? At this point, you guessed it, I'm looking for a retracement. I'm looking for a retracement so I can enter that trade. Where's my retracement looking to take place? I'm going to look for a retracement at my old range demand. Where's my old range demand? Well, if we broke structure here, this whole thing is my demand. Okay, so I'm going to drag that across and I'm going to say, right, I'm going to wait to see what price action does as it comes into my zone. All right, so I'm going to get rid of this just so I can show you this clearly. Get rid of that as well. Why not? Oh, look at that. That looks way better. All right, so where are we at the moment? So let's use the bar replay tool right around here. Okay, so where did I enter my trade? Well, I'm looking for price to come back in that retracement leg. So perhaps we drop down to the 5-minute. We play to see where this price happen. Good. So that retracement took place. All right. So we would have looked to enter our trade for this particular trade. We would have looked to enter my trade right around here. Yeah, maybe retest that zone. So that's where I entered. And I left my stop loss quite tight. Usually I tell you to put your stop loss down here, but it wasn't worth it in terms of my risk reward. Why would I put it down there? So I put it up here, and I said, well, if this price takes me out there, I lose that trade, and that's fine. That's fine by me. All right. So as a result, we look to see the price action. We look to monitor the follow through and see what happens as price went up. So price went up in my direction, printing higher highs and higher lows. As we can see, we break that structure there, create a high. We look to be creating another, high low. And then we break structure again, which is good. So I'm thinking, right, this is nice. So we obviously break structure again, creating another higher high. Now at this point, what do you think I do? Well, at this point, I say, cool, I'm in profit. I'm going to take a little bit off, tiny bit of profit off. And I'm going to move my stop loss. I'm going to move my stop loss at least. I'm going to move my stop loss to entry. So that's exactly what I did. I moved my stop loss to entry and I said, cool. All right, this is house money at the moment. I'm playing with house money. This is no longer my bread. All right. So what happens next? All right, something interesting happens next. And the moment I saw this, I was out. The moment I saw market structure flip bearish there, we got a bearish break there because the job of this low is to take out the high, which it did. All right. But we should have got a retracement for further upward action, but we didn't. Instead, we changed market structure bearish. And that's when I said, you know what? That's enough. I'm out. Okay. So I got out of that trade and it wasn't a crazy profit, but it's better to be safe than sorry. So as soon as you get a flip like that, it's telling you price is coming back down. And let's see what price does. Price comes down, it creates another lower low, and then it ranges here for a bit, and then it breaks down again. All right, and then does it stop me? Yeah, boom, it would have stopped me anyway. Okay, and there we have it. That's what we have now. So where are we now and what are we looking at? Well, just a quick idea of what I'm thinking at the moment is, based on the market structure at the minute, it does look like we are setting a nice range. All right, we're setting a range at our demand. What does that look like? Well, as you can see, we've got our range low and our range high. So in terms of the price action, I'll get rid of the bar replay. What am I waiting for? Well, we've got tap number one. We've got tap number one. Sorry, we've got tap number one, tap number two. Are we going to get tap number three for that juice up? That's what I'm waiting for. Tap number three. All right. Now you could enter based on a sweep of this low because you expect a rotation up there. If you got a break in market structure here, which you have, you could have said, cool, I'm going to enter here. You could do that. I won't be against you if you did that. But I'm liking this range, and I think I'm going to wait to see if we get a nice Trinity model. Tap number three. We can either sweep this low for the move up or have a reaction at this, creating a higher low from around here. All right, so that's what I'm waiting for. So my next trade idea based off of this range is a long position right around there. I'm not sure where it's going to happen. We're going to have to look at the price action, or wait for the range to break, look for that retest and enter on that retest. All right, so that's it. We're going to leave it there, and I will see you at some point in the week.